You ever scroll Zillow at midnight, see a perfectly normal 3-bedroom house listed for $500,000 and think, okay, that's steep, but I could probably swing it if I just cut back a little? And then, 5 minutes later you're doing mental gymnastics like, if I skip vacations, stop eating out, and never buy coffee again, maybe, just maybe. Yeah, that feeling? That's literally millions of people right now. Because here's the uncomfortable truth. In 2026, a $500,000 house isn't a luxury home anymore. It's the new starter house. And yet, the math to afford it has quietly moved into a whole different universe. My name is Stan, and I spend way too much time thinking about housing affordability and personal finance math. If you're someone who keeps saving, keeps working harder, but still feels like homeownership is drifting further away instead of closer, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because today we're doing something most people avoid. We're not guessing, we're not dreaming, we're doing the actual numbers on who can afford a $500K house in 2026. And look, the math is brutal, but it's also incredibly freeing once you finally see it clearly. Here's the thing. Most people still believe this one idea. If I just make a decent salary, I should be able to buy a decent house. That used to be true. It is not true anymore. The housing market changed, lending rules changed, interest rates changed, but our expectations didn't. So people keep blaming themselves. I'm bad with money, I didn't hustle enough, I should be further along. No, the system shifted, and nobody gave you the new rulebook. Let's open it. We'll use realistic 2026 assumptions. Home price, $500,000. Down payment, 10% equals $50,000. Mortgage, $450,000. Interest rate conservative, 6.5%. Term 30 years. Your principal and interest payment alone, about $2,850 per month. Now add the stuff people forget. Property taxes, $500 per month. Home insurance, $150. Maintenance buffer, $300. Total monthly housing cost, $3,800 per month. Not luxury, not mansion, just a regular house. Most lenders want your housing costs to stay under 28% of your gross income. So if housing costs are $3,800 per month, that means you need to make about $13,600 per month gross, or $163,000 per year. Let that sit for a second. To comfortably afford a $500K house in 2026, you need a household income of around $160,000. And here's what most people don't realize. According to income distribution data from the US Census and BLS, over 80% of households earn less than that. So when people ask, who can afford homes anymore? The answer is a much smaller group than you think. Now you might be thinking, but Stan, I see people buying houses all the time. Yeah, and here's why that's misleading. You're seeing dual income couples making $90K or plus $80K, people using family help for down payments, buyers stretching way past safe ratios, or people who bought years ago and just traded up. What you're not seeing, the stress behind the scenes, the maxed out budgets, the emergency funds disappearing. This is where it gets really interesting. Because housing affordability isn't just math, it's psychology, the psychology trap. Humans are wired to compare sideways, not downward. You don't compare yourself to people struggling more. You compare yourself to people slightly ahead of you. So when your coworker buys a house, your brain goes, if they can do it, I should be able to too. But you don't see their parents' $40K gift, their student loans already paid off, their side income, their inheritance, their risk tolerance. You only see the outcome, not the inputs. And this leads people to stretch into homes they technically qualify for, but financially cannot sustain. The dangerous difference between approved and affordable. Here's something banks won't tell you clearly. You can be approved for a mortgage that quietly wrecks your life. Let's say you make $120,000 a year. A lender might approve you for that $450K mortgage. But look at the math. Take-home pay after tax, $7,200 a month. Housing cost, $3,800. Leftover, $3,400. Now subtract car payments, groceries, insurance, utilities, phone, internet, student loans, childcare. Suddenly you're saving nothing. One emergency and the house becomes a burden instead of a blessing. This is why so many homeowners are quietly house poor. Who actually can afford a $500K house? Let's get honest. In 2026, the people who can truly afford a 500K house without financial stress usually fit one of these profiles. 1. Dual income households, making 160K plus. 2. Solid incomes, stable jobs, moderate debt. 2. High earners, single professionals making 150K, tech, finance, medicine, law, etc. 3. Equity buyers, people rolling profit from a previous home into the next. 4. Family-assisted buyers, down payment help changes everything. 5. Investors using rental math, not personal finance math. Everyone else? They're surviving, not thriving. Here's the hidden cost of buying too much house. You trade freedom, flexibility, peace of mind for square footage and a zip code. Look, owning a home is amazing, but owning a home that owns you, that's a cage with nicer walls. So what should you do instead? Now, you might be thinking, so am I just screwed? No, you just need a better strategy than blind optimism. Here are 3 paths that actually work. Redefine the win. Maybe winning isn't a 500K house in 2026. Maybe winning is a 350K home with breathing room, a smaller place with massive savings, a duplex where rent covers half your mortgage, or renting intentionally while stacking investments. Security beats status. Every time. Build buying power, not just savings. Most people obsess over the down payment, but your income power matters more. Ways to move the needle. Negotiate salary every year. Build one strong side income. Pay off high-interest debt. Improve credit score. Every 20 points matters. Choose locations based on math, not vibes. A 10K raise changes affordability more than $10 saved. Delay without shame. Here's what most people don't realize. Waiting can be a power move. Buying later with better income, lower debt, bigger safety net is way smarter than buying now just to keep up. You don't get points for struggling earlier. So let me tell you about a friend of mine. They bought a 520K house in 2022. Everyone congratulated them. 2 years later, emergency fund gone. Credit cards creeping up, vacations stopped, constant money anxiety. On paper, they made it. In reality, they were exhausted. Contrast that with another friend who rented longer, invested aggressively, built income, and bought later with ease. Same city, same market, different mindset. The hard truth that sets you free. Here it is. No sugarcoating. If you don't make around $163,000 household income in 2026, a $500 house will likely stretch you thin. That doesn't mean you failed. It means the price of housing outpaced the price of labor, and that's not your fault. But pretending the math doesn't exist? That part is optional. Success isn't the biggest house, the fastest timeline, the nicest neighborhood. Success is sleeping at night, having options, not panicking when life throws a bill at you, building wealth instead of just building walls. A house should support your life, not consume it. Action steps you can use right now. If you take nothing else from this video, do these 4 things. 1. Run your real numbers. Not what the bank says, what your life says. 2. Set a stress-free payment limit, not the max, the comfortable. 3. Build income leverage. 1 raise, 1 skill, 1 side stream. 4. Detach your identity from timing. You're not behind. You're building differently. Look, I know this video might feel discouraging at first, but it's actually the opposite, because clarity beats confusion and strategy beats shame. You're not bad with money. You're just playing a game where the rules changed. Once you know that, you stop chasing illusions and start building real security. If this helped you see the housing market more clearly, hit that thumbs up, subscribe for more real-world money breakdowns, and share this with someone who's stressing about buying a home right now. Because the truth might be brutal, but the right plan makes it powerful.